what we are seeing in the market and whether now there could be some sort of trend lines that could be established moving forward. Amit, thank you so much for your time. First up, pure play case of consolidation after the rally that we saw day before yesterday. IT stocks getting hammered down yesterday and some consolidation in stock positions this morning.
Yeah, hi Kartik, good morning. Thank you for having me. Yes, I think after a gap up which was done because of the US-India trade deal, there seems to be a little bit of a consolidation. Obviously, the IT stocks were under pressure because of the new legal tool from Anthropic's Claude, large LLM. So the IT stocks have been under pressure, which is pulling down Nifty a little bit. So market is trying to consolidate. It's still holding up key levels of 25, 500, 600 kind of a levels. So we'll see, how things end up by tomorrow when RBI policy is also due. But
Absolutely.
yes,
We will
there's a
we
lot of
will
consolidation
we
happening.
will talk about the RBI MPC also in just a moment. But IT stocks are seeing some buying action this morning. In fact, looking at the charts, Infosys has recouped some of its losses from yesterday. The stock is up about almost 0.75% or so right now. TCS also in the green, up about 1/3 of a percentage point. So overall, yesterday's massive dips that we saw, a good time to buy IT stocks, or do you think the kind of disruption that we are seeing with AI, especially with the Anthropic tool that you spoke about just a moment ago, are we likely to see a lot more AI disruption and hence perhaps being careful, cautious on IT stocks is a better sentiment, or good valuations right now to dip into that sector?
See, I think, the success of these AI LLMs, this is far from guaranteed, given that they lack the specialized data crucial to businesses in the industries. So this sell-off is more like reflecting a scramble to shield portfolios as the rapid advances in the technology, muddy valuations and business prospects beyond the standard 1 to 2 year. So my sense is that sell-off, which has started the last quarter, is a manifestation of basically everyone awakening to how disruptive AI could be. It was always disrupted, but there are always layers to it, and this new LLM actually impacts a lot of industries in coding, marketing, sales, and legal. So suddenly the wide modes of many of these companies feel a lot more narrow today as competition from AI created product intensifies. So probably it's an overreaction, but the threat is real and valuations must account for that. So, but the IT services companies in India is not really AI LLM driven, though they get directly impacted from it.
Right. Okay, fair enough. Another impact point for India's IT stocks specifically are also going to be perhaps interest rates moving forward, but more so from US and India. But we will talk about the India interest rate expectations also. I'm also looking at steel stocks this morning, the non-energy minerals. Now, again, while we await the joint statement from India and US on the final contours of the India-US trade deal, the the entire steel and aluminium space had a fixed tariff, like did the auto components. But with this 18%, that confusion continues. We saw a massive rally on the day of the announcement of the trade deal, but this morning we are seeing a great correction. Tata Steel is down about 1.3%. Hindalco is down about 3.5% or so. Amit, what do you make of this sector right now?
So I think that's just a reaction of what the U.S. markets were doing or the China markets were doing this morning. My sense is that there are a lot of issues with the trade deal which was announced. There is no really timeline when these uh, uh, when these reduced tariffs actually go into place. I think there is a lot of deficiency in that. It will get resolved within time, probably 1 month, 2 months, I don't know. It will take some time. So till that time, obviously the stocks had a good reaction on the day of the announcement. But it's more like consolidation. So I'm not too much worried about these 1%, 2% moves as such. But the larger picture is that if the tariffs are reduced in a decent staggered manner over the next 1 or 2 months, then the upside can be substantial even from here in the metals and commodity stocks.
All right. And what do you make of the latest phone call between US President Donald Trump and Chinese Premier Xi Jinping? Reports coming in that perhaps China has opened up its agri sector and is now willing to buy soybean. More pressure for India to give in?
So I think these are all geopolitics, and we are living in a multipolar world where negotiations keeps on happening on various things.
Yeah.
Soybean is a very important component of the U.S. and China deal. So China have obviously put a lot of restrictions and tried to pressurize U.S. in reducing tariffs last year. I think some of that has put into perspective now, where there are more negotiations to reduce the tariffs and increase the market exposure to soybeans. India is not a very big player in soybeans, so it should not really impact in that sense.
All right, no impact really on India. Now, a day before RBI is set to announce its decision as part of its monetary policy committee, expectations are that perhaps there's going to be a pause and there is not going to be another rate cut given that inflation numbers are benign. So, what do you make of inflation-specific sectors, rate cut-specific sectors, whether it's the BFSI space, whether it's the auto space, or even for that matter, the FMCG space, Amit?
So we are actually with the market consensus camp. We expect that RBI will keep the policy rates unchanged and the stance as neutral tomorrow as well. We already had 125 basis points of easing last year. And with the significant portion of easing already delivered, the RBI would probably adopt a wait and watch approach, placing greater emphasis on monetary transmissions. India's 10-year bond yield has obviously continued to remain elevated despite the cuts, and the CPs and the CD rates have also risen. So the focus is much more on the liquidity management than a rate action. As far as BFSI is concerned, the liquidity conditions in the banking system have remained constrained over the past few months, limiting the effectiveness of monetary easing. So the banking sector liquidity, which is measured like the percentage of NTDL, that has stayed below 1% for the last 5 months. And in fact, in January, it was 0.2%. So there is persist pressure on the exchange rate because of that. And RBI also has to intervene, limiting the effect of the OMOs, which they are doing by sapping the liquidity. So in that sense, I think now things are much more better condition with this trade deal between US and India that could support foreign flows and INR, which can give RBI a little bit leverage to manage the domestic liquidity. So the macro picture remains good, but I think RBI would probably remain in wait and watch mode and see how things unfold on the trade front.
All right. And what about the FMCG space? Because we are seeing Hindustan Unilever up almost 2% or so in trade this morning. Is there a specific trigger, or again, this is just a good valuation purchase?
I'm not so sure about actual. I don't really track the stock as well. So
Okay.
until unless there is a stock specific news, I'm not aware about that.
Okay. But is this also going to be something which would be interest rate specific, or do you think FMCG is completely out of whatever action RBI takes?
Yeah, generally, if there is a anticipation of liquidity easing and rates going down, then FMCG as a pack, gets benefit from that.
Overall outlook going forward, last question to you, Amit, this morning. Outlook for this quarter, let's say the end of this financial year, as far as the benchmark, Sensex and Nifty are concerned. Are we likely to see, with all that we are seeing and potentially, details about India's trade deal also hopefully emerging in a few days from now, are we looking at Sensex Nifty touching their lifetime highs and crossing their lifetime highs and staying in that territory for a while to come? Or do you think it's all at this point going to be just speculation and the devil is going to be in the detail?
No, I do agree with you that the devil will be in the details. How fast we can get those details about the US-India trade deal, that would depend. If the details comes in over the next 2 to 3 weeks, then we can definitely see Nifty touching all-time highs. Already, Bank Nifty is at almost at all-time high. The mid caps are also catching up near close to all-time highs. So I think we need a little bit more detail so that feels more confident about the prospects going forward and position accordingly. So yeah, the details are very critical for the market up move.
Right, let's leave it at that. Amit Kumar Gupta, thank you so much for your time and a pleasure having you here with us on News 9.
Thanks, Kartik.